Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. Today we're diving into Trulieve Cannabis Corp's latest report, and let's just say they've been busy raising some serious cash. Don't miss what this means for their future. Before we dive in, if you like getting straight up insights from company documents without the corporate jargon, make sure you hit that subscribe button. And hey, we've got a fantastic Discord community brewing with more real-time analysis. So check out the link in the description below to join the conversation. Alright, so on the 8th of December 2025, Trulieve Cannabis Corp, or the company as they call themselves, announced they've secured commitments for a private placement. Basically, they're selling some new IS officially known as senior secured notes, and they're aiming to rake in a cool $100 million. This offering, the notes as they're called, will be senior secured obligations. What that means in plain English is that these notes will be among the first things the company pays back if things go south, and they're backed by specific company assets. They're selling these at face value, so no discounts there, and they're offering a pretty attractive interest rate of 10.5% per year. This interest will be paid out twice a year, every 6 months until the notes are due. These particular notes are set to mature around the 17th of December 2030. That is about 5 years from when they'll close this deal. Trulieve also has the option to redeem these, meaning they can pay them back early, but not before 2 years after they're issued. The price for an early redemption will be outlined in a more detailed legal document called a supplemental indenture. So, what is all this money for? Trulieve plans to use the cash for capital expenditures, which generally means investing in new equipment, facilities, or technology. They're also earmarking some for other general corporate purposes. This suggests they're looking to grow their operations or perhaps meet ongoing operational needs. Now, a crucial point here is how they are offering these notes. They are not registered with the Securities and Exchange Commission, or the CC as it is commonly known, under the Securities Act of 1933. This means they're not selling these to just anyone. They're targeting specific types of investors. This offering is specifically for persons they reasonably believe to be qualified institutional buyers, meaning they're big players with lots of assets or accredited investors who are individuals meeting certain income or net worth requirements. This is being done under exemptions from registration rules, namely Rule 506B of Regulation D and Section 402 of the Securities Act. They are also selling these to non-US persons outside the United States under Regulation S. This is a common way for companies to raise significant capital quickly without the lengthy and costly process of a public registration. It is also important to understand what this filing is not. This report itself is not an offer to sell these notes, nor is it a request for someone to offer to buy them. It is simply reporting that the deal has been put in place. The company has attached the full press release announcing these commitments as Exhibit 99.1, and it is incorporated by reference into this report. This means if you want all the juicy details of the announcement, you should check that exhibit. As is standard for these filings, there is also the cover page interactive data file, which is basically a digital version of the report for computer processing. Now let's cut to the chase. What does this all mean for Trulieve Cannabis Corp? This is a significant move to raise capital. $100 million is not pocket change. The 10.5% interest rate is on the higher side, which is typical for private placements, especially in industries that might be perceived as having higher risk. It signals that Trulieve needs this capital for growth or to strengthen its financial footing, and they are willing to pay a premium for it. The fact that they're using exemptions from registration means they're going for speed and efficiency. This is good for the company as it allows them to secure funds faster, but it also means the average investor won't be able to buy these specific notes directly. It is a stamp of confidence that sophisticated investors are willing to put a significant amount of money into Trulieve. Looking at the broader picture, Trulieve is a major player in the cannabis industry. They operate in multiple states across the US, and these types of capital raises are often used to fund expansion into new markets, acquire competitors, or simply strengthen their position in existing ones. The stated use of proceeds for capital expenditures and general corporate purposes suggests they are looking to invest in their infrastructure and operations, which is a sign of forward thinking and a desire to scale. However, the higher interest rate also hints at the perceived risks associated with the cannabis industry, even for a company as established as Trulieve. Federal legalization in the US is still a complex and evolving landscape, and banking and financing can remain challenging for cannabis companies. This private placement might be a way to access capital that is otherwise harder to obtain through traditional bank loans or public offerings. In my view, Trulieve's ability to secure $100 million in a private placement, even at a 10.5% interest rate, points to a resilient business model and strong investor confidence in their long-term strategy. The key will be how effectively they deploy this capital. If they use it for strategic expansion and operational improvements that drive revenue growth and profitability, this could be a very positive development. The risk, of course, is if the market conditions change significantly or if their growth initiatives do not pan out as expected. They need to ensure this new debt enhances their financial health and doesn't become a burden. What is your take on Trulieve's latest move? Do you think this capital infusion will fuel significant growth, or does the higher interest rate signal underlying concerns? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more in-depth corporate analysis. And again, join our growing community on Discord, linked in the description. Thanks for watching, and I'll see you in the next deep dive.